All right, so first question here from JT. JT asks, I wanted to ask if there was a methodology or a progression you look for when scratching trades. Oh, it's all contextual, JT. There are situations I would be in where I would be very likely to scratch a trade. So, first and foremost, I think it's important we start here. Um, I could answer and say, oh, yeah, here's something I look for to scratch a trade. But the deeper answer is that it's contextual with the type of trade and the type of context and the overall situation I'm in, whether or not kind of where I am along the spectrum of likely to even look or consider scratching a trade versus not. Not interested in scratching the trade, even if some of those same conditions might show up to where a scratch would be made otherwise. So that's kind of first off. Let's go to this little chalkboard here, or whiteboard, I should say. And really contextually, what the one of the main things that comes down to for scratching would be kind of this first decision tree, if you will, and that would be what we call a strong narrative. And we teach in Futures Foundation kind of how to rank a narrative from weak or non-existent all the way through just A plus plus, right? And there are multiple factors that weigh in on multiple higher time frame references and whether or not there's confluence present and all kinds of stuff like that. So you might have a strong narrative that would be kind of one context, and the other you might have, let's say on the far end, no narrative, right? And maybe there's some, maybe there's three. And so we're considering scratching a trade. Yeah, I can go ahead and tell you if we're over here on the really, really strong narrative side, the on this is kind of going to we start off with a contextual strength scale, and that brings us to almost what we're going to create below here, which is almost like a scratch likelihood scale. And over here, this lines up, with strong narrative. This lines up with no narrative. Um, on the strong narrative side, we're very low end on the potential to scratch, and over here is no scratching, right? Um, we're just not going to look for, let's say, something with very short term order flow, a divergence, if you will, something like that. Um, you know, you see even down to a held bid, absorption type deal or something against your view or position. It's just not going to matter. It's just not meaningful enough to have you just bail out of a position. Um, but as we progress as traders, I think we give ourselves, at least the way I approach things, give myself a little more leeway to make um, more fine-tuned decisions, if you will. So even in some situations where there is a stronger narrative, let's say we find ourselves somewhere here, um, it's going to be, I might scratch, right? Maybe, but I'm going to be very, very quick to re-enter, right? It's almost like it's going to have to tell me, hey, you should definitely scratch. You should definitely scratch. This is a really bad situation. You should definitely scratch, right? Think of that compartment. Think of that, I guess, contextually wise, though. When I say it's a really bad situation, it's a really bad short-term situation. We're still within a really good long-term situation. Keep that in mind. So if it looks really, really bad in the short term, I will scratch. It's going to have to tell me. We're still in the strong narrative category here. It's going to have to tell me this looks terrible short term, and I'll scratch. But so it's got to give me all the evidence, almost like we're in a court case here. You got to really present some strong evidence before I scratch. But for me to get back in, oh man, you just got to give me a glimmer of hope. You just got to give me the smallest little bit of anything, and I'm back in that trade because I really, really do want to be risk on in this particular environment at this particular trade location, given the narrative, given the risk reward, given the situation we're in. So, if but over in here, yes, I can absolutely scratch where there's a narrative, but maybe there's some dissonance, some other additional higher time frames that don't really line up or agree, or potentially hitting some destinations on some time frames while others are, potentially giving some trades. um yeah, it's like, okay, I'll scratch, and that'll kind of be that for the time being. I'll wait for things to look pretty good again across time frames, or maybe I'll wait for the dissonance to clear up before reinitiating, things like that. And then over here, this is more of what it's kind of like scalp trades for me. And just because I say a scalp trade, that doesn't mean that it's like a 5 cent or scalp in crude, or a 1 cent scalp in treasuries. It's not like that. It's more of like a scalp is, it's definitely shorter term. But for me, because I think a lot of people mean different things by when they say the word scalp. For me, scalp doesn't have a higher time frame component really driving it. And so I am going to just really, it's almost like a purely intraday type play where I'm only looking for, a reversion across the current day's value, or a move back into VWAP, or just the current high of day to be taken out, into kind of an extreme. Just kind of oftentimes one medium term rhythm rotation, if you will, intraday. So, anyways, a lot of those trades, they don't have a narrative component to them. So, guess what? They're going to be very, very dependent on the shorter term variables. So, things like the order flow, using the footprint chart, all that kind of stuff. And so, along back to our scratch paradigm here, well, now we're over in this area, and it's highly, I don't know, I don't want to say highly likely, but maybe we should not use high. Maybe we'll say it's very easy, very permissible according to my processes and whatnot. If that's how you spell permissible, um, to scratch, right? So we're now on the high end. We started out on the low end. Now we're on the high end of scratch potential. So, anyways, maybe JT, you're sitting back now and you're like, my goodness, this guy's this guy's going off on a crazy talk here, with regard to I just wanted to know if he ever saw something on the tape that caused him to scratch a trade. But context is king, guys, and this is really important, um, for me to frame it like this and understand even the likelihood before we ever drop down in the funnel, if you will, and start talking about, with this particular trade or that particular trade, what are the actual variables I might use to scratch, or things like that. And typically it's order flow based stuff, but um, you could also call a scratch, I suppose. Um, Sometimes it's just basically a price level that gets taken, right? So a lot of times my key level will be here. Let's say we've come down into it, and I'll get long here because the buyers take control on the tape. It looks good. And I will put my stop right here a lot of times, right? So would you call this a scratch if I get stopped out right there? Some people would, because guess what? This narrative, this key level is still in play. It has the idea for the trade, the overall premise has not been violated. It's a stop out, but in a sense, it's actually a scratch because if it comes in and maybe wicks the level and stabilizes and here, well, I'm going to be a buyer right here, right? So, um, yeah, I guess I've beat this horse enough for that, but I hope that's helpful, JT. And I hope that's helpful to a lot of the students and whatnot here. I think it's scratching is something that is difficult to nail. You end up with people on both sides of the spectrum who just kind of refuse to scratch. And I think that's if you want to make yourself as a developing trader begin in one of the camps, I think starting off not being a trader that scratches trades is absolutely, no question, the way to start. I think that over time, as you become more nuanced, as you have a better grip on your own processes and have earned those 10,000 hours and all those kind of things, I think scratching becomes more viable. I think at the beginning, most scratches are actual emotional decisions rather than process driven, market generated information driven. And even sometimes for when they are market generated information, you're getting your hierarchy wrong, right? You might find something weak on the tape, but you're over here on this section and it's the wrong time and place for that information to all of a sudden go to the top of the food chain and say, "Ooh, order flow's wrong, let's get out." Order flow needs to be lower on the hierarchy down here and should not cause those kind of decisions. So misinformation, or not misinformation, but wrong application of information is one of the biggest reasons for bad scratches, as are emotions. Earn the right to scratch more. Cool, Toby. Awesome. Shazeb is asking, Future Foundation, do you have playbook setups similar to the Winning Trader? Um, in a sense, yes. So the Winning Trader, it's like 10 different setups, and from opening drives to um, pullbacks to VWAP and all kinds of different trades. Um, and they break them down in kind of playbook format. Um, so it's 10 different trades. I think they may have changed it, but it used to be 10 different trades back when I knew what it was. Um, and they're all very specific. It's almost like 10 different niche style trades, right? And kind of the good thing about that is if you're an equities trader, it's specifically equities, like type stuff, low floats, opening drives, that kind of thing. It exposes you to they're very different styles, and so it might help a trader say, yes, this really clicks with me and I can start to develop a niche around this particular playbook trade or whatever. And so it's kind of like, here's a trade, here's a different kind of trade, here's a different kind of trade. What Futures Foundation does is, I would say, on one hand, yes, it absolutely teaches you playbook setups. But what it does, it teaches you a framework, okay, a way of viewing markets in general any and all markets. And it teaches you to see through the higher time frame section, which includes the market profile course, which includes longer term VWAP stuff, all kinds of things there, to where it teaches you to see the risk reward landscape. It teaches you to see where there is no strong edge. It teaches you to see where there's a fresh shift in current market condition, and there's that risk reward is just as good as it gets. So it teaches you to see day to day as you come into the market when and where and if there's really good risk reward opportunities and where those lines in the sand are and things like that. Those are the levels that I provide to you guys each day with my preps and whatnot. So I think you see that, they're good levels and whatnot. But it doesn't, I don't know, it'd be interesting to have some students even weigh in on this in the chat if you want to give your opinions on the answer to that. For me, it's not exactly the same as like, here's a playbook trade, but it kind of is too, because we teach you how to see the risk reward landscape on the higher time frame, teach you how to prep, teach you how to come up with the hypos for the situations that might unfold that day. And then we teach an intraday framework, which is a series of essentially 4 ways, maybe 5, to get into those risk reward opportunity trades. But now we're using intraday VWAP and shorter term tools and teaching rhythm and acceptance and all those things to time your trades and actually express those ideas, manage risk, and manage profitable trades. So you see what I'm saying here? It's a little more of a framework way to operate rather than something that I could teach you that you could put into one single mathematical, like if you see this followed by this, then this, that's the trade. That's the playbook trade. No, I'm teaching you how to see a bunch of trades with kind of a little looser way of expressing them, but still it's not like some other people's like market profile stuff where it's like, seems like there's trapped, shorts in this market, so therefore we're going to be bullish. No, that's kind of ethereal, it's kind of like not concrete. It's definitely concrete. It's just flexible. It's a flexible framework for concrete type trading, if that makes sense. Anyways, what sample size would you say should be there to determine which setups a trader is suited for? I mean, you definitely don't want to start making assumptions about the performance of any particular setup inside of, let's say, 30 trades. Maybe 20, but 30 is probably the real number there. In fact, I think it's really important that almost anything is viewed from a trader's perspective. It's funny, we're talking about statistical significance and all kinds of stuff here, but the point I'm going to be getting at here is actually psychological. So I think it's very, very important that a trader see things, their performance, how well something is working, how well something is not working across 20 to 30 trade sample sizes. And so, especially on the performance side, if you start to monitor, your feelings of, am I doing good or bad across larger sample sizes, what does that do for you? Well, it frees you up to putting so much dang importance on the outcome of individual trades. Your job is really to monitor profitability over 20, 30 trade sample sizes. That's something that Lance Beggs taught me, I don't know, in 2010, 10 years ago, a decade ago, probably. Um, he was the first person that ever really kind of taught me to um, think of things in that way. It used to be, oh, do the analysis because you want to have the right view. You want to unlock the secret, if you will, of markets so that you can profit and be right in your analysis. And therefore you make money and blah, blah, blah. And if you lose on a trade, that means you didn't see something, or maybe your whole um, secret formula that you're trying to implement is not the right formula, and you should then go search for something else that's the right formula. And that's a recipe for sustained disaster. Now, how can I say that? How could I say that you should not go look for the next thing that works or whatever? And then at the same time, I have a Futures Foundation course that we sell to the public that says you should definitely do this. Well, funny you should ask. That'll be my question that I insert into the Q&A. How can I hold the belief that someone should learn my methodologies and ways of seeing markets rather than just stick with what they're currently doing? Because I just said that if they keep jumping around and deciding that their secret formula for unlocking the markets is not so secret and not so good. That's because I think that what I have found is grounded in certain truths about markets. I haven't gone and, for example, I could have gone and back tested something, optimized it. I mean, really dialed it in. And I could even use as part of the marketing that our marketing team would use to say, look at this. Look at how this has performed over the past 7 years. Here's how much you'd make if you followed it. Here's the worst drawdown. It's really good risk adjusted, blah, blah, blah. And it could be based on, let's say, to use the age old examples and pick on these poor people, moving averages, right? Nothing wrong with a moving average. That's, you use as a way of kind of gauging something about price action or whatever. That's okay. VWAP is a form of a moving average in a sense, and I use it. So, but what the problem with this story that I'm shaping for you here is I just found something that worked over the past 4 or 5 years, and maybe the past 4 or 5 years have been a bull market. You know what I mean? That you got to consider volatility cycles. You got to consider all kinds of stuff. And I just tweaked it and tweaked it and tweaked it until the 87 period moving average was the most profitable one that back tested. And I put it out there and I said, here, this works. It's proven. Buy it. That's not something that's grounded in market understanding. That's something that you've just gone back through history and found, ooh, this would have been profitable. It's probably not going to work for the next 5 or 6 years. But what I've found and what I teach in Futures Foundation is something that is grounded in theory, because that's the strongest word we could use, right? I could say facts, but at the end of the day, it is theory. But it's based around everything is congealed, I guess. Everything is compatible from the very start of the course to the end. It follows the same reasoning and logic, if you will, behind here's what we're looking at. And guess what, guys? It goes back to other market participants, and it uses price, time, and volume, the 3 data points that we have in markets, rather than just maybe price and time like a lot of people. And it finds certain truths about the way people behave, the way that auction markets, whether it's the stock market or an auction for antique cars, it's the way things work in terms of building value, having excess or a lack thereof, and the implications, given no new information hits a market, that the current auction process will continue until we see certain things. So anyways, real quick, I want to talk about the S&P. I think it's a really nice case study. So the past couple days, what have we been talking about? We talked about how it looked like it could go lower. It looked like it could take out some lows. We did an afternoon call right here because we thought that this became important, that we went bearish. We expected this to crack yesterday. And again, it didn't. So it's leaving behind all these little lows staggered. If we had a higher time frame chart, we could see them all together, where there wasn't great excess. And we thought, well, if we remount 3280, which we did into the close yesterday, okay, we'll shift. Fine. That's bullish. We would now, as long as this is able to hold, overnight, I expected us to start to push some of these, upper bounds to this. Remember we talked about this higher time frame bearish level 3308, and this was a higher time frame bullish level. Which, did you note the one thing that I changed other than a couple tiny tweaks to the levels? The one thing that's different about today's prep versus yesterday is that I removed this from being a bull reference. Why is that? Some student quickly tell me in the chat. It's a simple answer. Why did I remove that? I kept the level, but I changed it from a bull level to a neutral one before the open today. That's right. Yep, exactly, guys. So the way that those lows had formed over the past couple of days, and the way that it looked like there was no excess, the market needed to at least wick those areas, if not drive lower from there, right? That's not, if we come down there again, that's not going to be a bullish place, right? That's going to be a place that's likely, just like it has been in the other times that we've been wrong, but it's even compounding, if you will, in the view that if we come down there again, it's going to need to crack. And so, but this was, I had, when I did the prep yesterday, I think I ended with, and we'll adjust going forward or whatever. So had I, done my prep, prior to 4 a.m., 4:30, this would have been a bull level. Okay, so I want you guys to know that, fine, poor lows. Sometimes the market just puts in a series of poor lows and goes higher. Fine, especially the ES. And so this was remember the shorter term bearish level, which we did the afternoon outlook general commentary video on. Go watch it if you haven't. Go watch the sequence. I don't know if any of you have ever done this, but I think there's a lot that could be learned if you go back and watch, let's say, the past 3 or 4 ES recap videos, or even the prep and recaps back to back to back to back to back to back over a series of days. Not just like as you kind of double check your levels or however you use it, but like treat it as a case study and go back and like listen to all the things that were said and whatnot. Anyway, so this would have been a bull reference now that we overtook it, but it didn't hold right into the overnight session. It breaks again, and convincingly so. The tape, the order flow, all that stuff was convincing as this break, and it made sense. Almost forgot this. This high didn't look great either. I know there's a tiny wick right here, but it's not much of one. Little bit there, and so we come up, and rather than reaching, a lot of times it's what doesn't happen in markets that's important. We came in and we wicked that kind of double top right there, 32.92. So this was the wicking of that, and then strong selling. We get back below a shorter term, which would have been bull reference. It turns bear again, just like it did over here. So if you're trading in Europe or into the open here. Fantastic, fantastic, fantastic. VWAP was right there. Um, so now, I think this is the next point I wanted to make, which is I would not, and I'm not sure if Stas or some of you in the chat, in the student room, I know you guys were talking about it, calling out the shorts in real time. Let's see, where was the one? 955. Yep, right in here. So this one was one that a lot of students hopped on right there. Nice little pullbacks. This is a higher time frame chart. So 10,000 volume here. So this is a more substantial pullback than it looks like on this chart. Beautiful trend today. So anyways, if you did get short here, if you did get short up here off the reference, just before the open, then this is not a situation, because of the dynamic of those lows and how it's not a bull reference anymore. If it were to get there, if you are going to set a target beyond the level. Put your target where you feel like the volatility is going to give you the wick to crack those prior lows. So anywhere around in here was a great exit, or you could still be in. Heck, you could still be looking to get bigger and add into this position as long as we're below these levels. That's fine as well. We do have a bit of a shift in order flow. I shouldn't say a bit. We do have a pretty substantial shift in order flow ever since after we ran those stops below the lows. So we'll see if the bulls keep pressing here and it sustains, or perhaps they get absorbed or whatnot. It looks like in my opinion, it looks like the bulls are not done fighting for this area here. But that doesn't mean I'm looking to get long. Not at all. I'm not looking to be long this market unless we are back above this reference. Be a nice setup, wouldn't it? We now wicked all those lows that I kept saying, should have taken out the low, didn't do it. Okay, we left it behind. Fine, whatever. We'll go with what is. Ooh, look, it's setting back up again. Boom. Now it takes them. Trades are like that. They set up, they don't work. They reset up, they work. Especially the way I view markets with the higher time frame stuff. It can take multiple days for a narrative to get nailed. Anywho, I think ES was a really good case study. It's going to be a good inflection here to see how this shakes out. And I guess that's it for today. Hope this was helpful, and we'll see you all around in the room. Cheers.